All right, so we're going to talk a little bit about trend and what trend can do for you, as well as how we can take advantage of it and preventing overuse. So, trend, when you think about and hear overall market conditions and hear a lot of people talk about market conditions, trend is kind of like the baseline for what you're here. And this is more prevalent in conversations around like CNBC and kind of like the mainstream news media, where you're thinking about the market as a trending organism. Um, and while that's true, it's not the entirety of what you should be thinking about it as, right? So we've gone through and we've looked at supply and demand. We've looked at building out segments, and each of those really signifies a new area of trend. And really, when you think about it, trend can be identified as the market moving in one consistent direction, right? But there can be oscillations within each of those trends. So the reason that you don't want to get super bogged down with trend, because there's always going to be something that you can find to counteract what you're looking at. And instead, what you want to do is focus on the majority of the movement and just the overall trend, for lack of a better term. Right? So if I were to look at this section right here, I would look at this, and the trend to me would be up. The trend to me would be up and to the right rather than down and to the right. You're always reading left to right, and you're always looking at the market as moving in one direction. And trend can be identified by calculating in the time frame that you're looking at, can be identified by calculating less so the overall direction that you can map out, and that you can connect, and more so by what's happening. So if you look at this, it's very clear that every time the market has substantial dips after movement upward, you're making higher lows. And what that means is that as the market trends, it's going to move up because the market is in a pattern of buying and selling. So you're never going to get trend be dictated by one movement. It's going to be dictated by oscillations. In this case, higher lows and higher highs. Or, yeah, higher lows and higher highs. So as the market moves up, it retreats. And then, so long as this low is lower than this low, or this low is higher than this low, the market is trending upward. And then again, as the market moves with this low being higher than this low, the market is trending upward. Similarly here, the market is trending upward if this were to hold. Now, there's no tried and true formula for how many of these need to take place before it's considered in a trend. It's more so just the eye test, right? Because if we were to then come back down and dip, and we would have expected that in order for this to sustain a upward trend, we would have wanted it to turn somewhere around here and continue to the upside. But instead, we broke. Now, I wouldn't, because we've had sustained success in populating higher lows, I wouldn't look at this and instantly say that if we were to turn around here, this is in a downtrend. I wouldn't make that assumption. I would again, not having any real formula for dictating this, but using the eye test, I would say that if we can hold this again and create a lower high instead of a higher low, you see it's just flipped. Here's your high, here's your lower high, here's your lower high. That I would say that this starts to dictate a downtrend. Now, trend is a tool that is useful in identifying potential market movements, but I will never trade based exclusively off of trend. What you want is trend in confluence with other things, right? So as you're looking for the market to move up, I don't want to exclusively trade based on the overall market trend and the overall market sentiment. I want to make a trade based on support and resistance, supply and demand, trend in confluence with Fibonacci. And Fibonacci, we're not going to get into it, but it is a trend tool because it's giving you mathematical ratios for how far back a movement is retracing before continuing with that higher low or lower high. So trend can really be understood by looking at a period within the market and understanding higher lows and lower highs, right? So this isn't by much, but here's a low, here's a higher low. Now we're getting upward. There's another higher low, another higher low, another higher low, another set, another higher low, another higher low. So we're continuing upward. And in turn, we're also making higher highs. Right, so you can go through the process and without even placing anything on your chart, without placing a channel or a trend line, which that's what these are, you can identify the market moving in one particular direction. And this is prevalent on every time frame. But before we get into anything with identifying trend lines, right, before identifying the context behind what this is or what this is, we want to look at the market and say, okay, well, before we place a tool on it, there's a high, there's a higher low, or a lower high, excuse me, there's a lower high. We would expect a lower high here. And then to complete this, to understand the downtrend continuing, we would expect out of this lower high comes another lower low, right? You should always pair a higher high with a higher low and a lower high with a lower low. It should continue. That defines trend, is those oscillations are continuing in the same cycle. The minute that you get a higher high, but you don't get a higher low, then I consider this uptrend broken and I look to establish a downtrend. So in this case, we've got a consistent set of lower highs and lower lows. You get your high, your lower low, your lower high, and then we fail to break down and give us a new lower low, which would have looked something like that. So now what I look at is this piece of movement right here and see where I can establish trend, right? I mentioned that coming out of this, one higher low would not give me the trends that I would, so look for. But now we're starting to get, we get a higher high, a higher low, higher highs, higher lows, higher high. And then once again, we're pretty much dead even. So, I wouldn't consider the trend broken here, but now we start to move down again. So now we've got a lower low, and we've got a lower high. We've got a lower low, and a lower high, and a lower low and a lower high. We're looking at a lower low, but then we get the lower high, but we never really push down. So we reestablish trend moving in the other direction. So while it seems easy to understand the peaks and the valleys of what's happening on the chart, and if you were to look at this and say, oh, I can plot trend easy, you probably could. Trend is easy to pick up on. It's overall market sentiment. You can look at this and say, we're trending upward, we're trending downward, we're trending upward. And that's good. That's what you want. But what becomes more difficult is to understand when it's pertinent to your trading and when it's pertinent to use. So to start, before we get into plotting trend, I would ask that everyone go through and start to look at the market and understand where the lower highs, the lower lows, the higher highs, and the higher lows are. Start to go through and just start to plot out trends. Do it on multiple time frames. If I go down to the 30-minute, right, I can look at this and say high, low, high, low, high, low, high, low. And so I can identify short-term trends on top of it. Because keep in mind, inside of this, where we're having all of these oscillations, the higher time frames are trending in another direction because each leg of a time frame is made up of oscillations of smaller time frames, right? So if we're looking at something like this as movement on the 4-hour, and bear with the terrible drawing, but this is what we're looking at on the 4-hour. Well, if we look at that as, so this is the 4-hour, if we look at that on the 30-minute, inside of that, you'll probably see something like this, where let's change this around to identify different colors. Right, so you'll probably see something like this. So within each period of trend on the higher time frames, it's made up by more trend on the lower time frames. And then similarly on, I'm not going to do this out because it'd be very complex and start to get really convoluted, but if you look at the 30-minute trend, within that, you've got the 5-minute. Right, so let's just change this just for a brief minute. Within that, you've got the 5-minute. Didn't mean to reset that. You've got the 5-minute doing something like this. And I know that none of those are going in the right direction, but it's just to illustrate the point that within each segment, there's another segment. And within each time frame, there's a smaller time frame doing the same thing, just more with a higher frequency. So that underlines the point of why leveraging trend can be so complex and why you really want to simplify it and pair it with your other tools. So to start, as I mentioned, just go through and identify trend by using high points and low points and calling out to yourself, is this a higher high, a higher low, or is this a lower high, a lower low? And finds that partnership between that movement.